think the top-down approach indicates that you have to have a longer-term view. By longer-term, I think 12 to 18 months is kind of my long-term. Anything beyond that, it's really hard to keep your finger on the pulse because so much new information comes into the market, unexpected information. So based on what we know now on economic indicators here and globally, we can take a view that over the next 6 to 12 months, certain aspects, particularly here in Australia, for example, that the RBA will be leaning towards a neutral stance. I still think there's a possibility for a rate cut to come, particularly possibly in Q4 this year. But beyond that, it does get a little bit trickier to forecast the data and currency movements beyond the 12-month window. I still think, I don't think inflation, although it's on the way up, will exceed the RBA's band. And if it does, it's most likely to be only temporary. I think the main thing is the employment data that we'll get this week as well. Unemployment continues to rise. I wouldn't be surprised to see that reach maybe 6.5% by June, July this year, which will really keep the RBA on notice and can stop them from pulling the trigger in terms of raising rates. And if anything, still continue to leave the door open for a cut. That's not their view at this point. They're playing a wait-and-see game to see how the data develops. But I think the data, particularly here in Australia, may not necessarily be all that rosy as we come off the mining peak. Look, I think the market's probably overly bearish in terms of how low it can go. If you look at the futures positioning, for example, the market's very short Aussie dollars and looking for further moves down, and that takes away some of the downside momentum. We need some fresh new selling for that Aussie dollar to have a swift move lower, and at the moment the catalyst for that is not that clear. It could come out of China if we do get some more concerns out of there, but based on our domestic data, the Aussie dollar seems to be hovering around that 90-cent mark, give or take a cent, and I think that until that positioning starts to square up a little bit and we get some of those short-term speculative sellers of Aussie out of the trade, then there can be some more impetus for another move lower. So I'm thinking 85 cents by year end is a reasonable target.